this a video for assignment 15, which happens to be the last assignment for transitions math, or transitional math, and it covers stocks. And I'm in no way, shape, or form an expert on stocks, and this is going to be very quick and just very, very basic, because if you're going to put your money in any kind of stocks, because you can lose your money buying stocks and bonds, and a lot of people are finding that out right now. You really, really have to do your own research and figure out some of this stuff for yourself. So this is basic, just very, very basic knowledge. Stock is a share of ownership in a corporation, so you pay them money so that you can be like a part owner in that corporation. A stock certificate is just proof of ownership in the corporation. It's just a sort of a paper form that shows that you are an actual part owner in that certain corporation. Stocks are just securities that represent an ownership or share in a company. The companies issue stock and as a way to raise money to grow and invest in their business. So maybe a company wants to start up a new section to their business, so they sell stock and people buy the stock, and that money's going in there, and then they can put that money towards building or going into a new area or whatever it happens to be. Or maybe they're planning on just doing some kind of research or whatever to better their business, and so they use that money to do that. For you, the investor, the stocks are a way to grow your money and hopefully outpace inflation over time. So in other words, you put in that money, and hopefully that money, that company grows and there starts to be worth more, and then that means your stock in that company are worth more, and you can raise money or have your money grow quicker than just the inflation rate, and it'll help you to do better with your money. When you own stock in a company, you're called a shareholder. So when you own stock in a certain company, you're called a shareholder because you share in the company's profits. So as the company makes profit, then you make profit also. Public companies sell their stock through a stock market exchange, like the NASDAQ or the New York Stock Exchange, or I think it's the China Stock Exchange also. Those are the ones that you hear on the radio and stuff all the time. Investors can buy and sell their shares among themselves using stock brokers. Those are just people who help buy and sell stocks for you. The stock exchanges track the supply and demand of each company's stock, which directly affects the stock's prices. Supply and demand, big thing. This doesn't really have a whole lot to do with the stock market, but supply and demand, gas prices. During this pandemic, gas prices got really, really low because the demand wasn't there, because we were all locked away and not supposed to be going anywhere. So the demand was, or the supply was a lot more than the demand, so the gas prices were way, way low. And then as things start to open back up, I know the place I normally buy gas here in the last week or two has went up about 60 or 70 cents for the price, because now people are moving around more, so the demand is higher, and that means they can get more money for the gas. Same thing with stock. If for some reason, let's say Procter & Gamble, just because that's a company that's close by, comes up with a cure for this for the COVID, and all of a sudden their stock would probably raise or go real high, so the demand for it would cause the cost of their stock to raise really high, and that just goes with the supply and demand, and that's what affects the price of the stock. This is a table, just a stock table, and I can't explain all of these. Again, you'd have to do some research on your own. I can explain some of them. They show in this stock table the high, and notice it says 52 weeks, that's a year. So the high over the past year, the low over the past year. This is the name of the company. This is the symbol. If you ever watch the stock market and they have that thing streaming across through there, and you see something like VX and BN and KMI, those are just the symbols that are used on the stock market. This is your projected annual dividend. We're going to talk about dividends here in a minute. Before I go on, I wanted to tell you that I'm wearing an orange shirt. This is your yield percentage. We talked about APY, your annual percentage yield. This is, I believe, sort of the same thing. You'll notice here that this stock yield percentage is about 1.8, and you would have to do more research on this, but I'm guessing that has to, or that's saying that you're going to earn about 1.8% on that stock annually. PE, price earnings ratio, that's something you'd have to look up. I'm not actually sure what the price earnings ratio is. The next one, volume of stock sold. Notice that this stock here, there's quite a few of them sold, and this is volume in hundreds, so it would actually add 2 more zeros on there to show you how many stocks or how many shares of that stock were sold that day. Sometimes it might be a good thing that there's a lot of stock sold, because that means that that stock is doing something. Maybe it's growing a lot and people are wanting to buy it. Sometimes it might be a bad thing, because maybe people are wanting to dump it because it's going downhill for whatever reason. So that's something you got to just really, really research. Highest price paid for the share during that day. So you got the highest price here for the stock, and then you got the lowest price paid. So for this first stock here, somebody paid $27.87 per share, and then somebody else, the lowest price that somebody paid for the day was $27.28. The stock closed. That means at the close of the market at the end of the day, this stock closed at $27.87 per share. And this last one tells you what happened from yesterday to today. So this stock, the closing price of this stock yesterday subtracted from the closing price today would have been up plus 0.50. So that's just a stock table, and you use it to see how your stock's doing. Just a couple of formulas. Cost of stock, and these are basic formulas. Cost of stock, number of shares. So if you wanted to buy 50 shares and the cost of the stock was $22 a share, you would just take 50 times 22, and that's going to tell you your total cost, or the cost of the stock. Then the total that you're going to have to pay is going to be the cost of the stock, so this number, plus whatever commission you pay to that person who's doing the buying or the selling of your stock. Profit. Profit is the amount of money made on we're not really dealing with a product, so amount of money made on an investment over and above the initial amount invested. So if you invested $100 and a month from now you sold that stock and you sold it for $150, Well, it's the amount that you sold the stock for minus the amount that you paid for it. So you profited $50. A loss is when the amount of money received from the sale of a stock is less than the amount initially invested. So if you paid $100 for your stock and you sold it for $50, then you do 50 minus 100, and you get that you lost, or you'd be in the hole, negative $50. So profit, loss, and again, this is a big thing right now because with the pandemic, the stock market, I know the stuff that I actually own and the mutual funds and different things went way, way down. These are just a couple formulas. Net sales, the amount of the sale minus your commission, or not minus your commission, minus the commission that you have to pay the person doing the stuff for you. You put this answer in down here for net sale and subtract off the amount that you invested, and that's going to tell you your profit or your loss. A dividend, the other important thing, a dividend is money earned as a shareholder of a corporation. Dividends are payments made by a company to the owners of the stock of that company. They're a way for company to distribute revenue back to investors. When the company's doing well, then they try to distribute that back to the investors, and then hopefully the investors will put more money into the company. One of the ways that you as an investor can earn return on your investing in stock is by getting these dividends. In the United States, companies usually pay dividends quarterly. So you would get a check from this company for so much money per quarter every 3 months. Some pay monthly, others pay semi-annually. It just depends on the company. A dividend is paid per share of stock. So if you own 30 shares in some certain company and that company's paying $2 annual dividends, then you just take 30 times 2 and you get $60. So you would earn $60 per year for those dividends. Not all stocks pay dividends, so if that's something that you're looking for, is to try to get some of that money throughout the year as the year goes, to get paid dividends, to have some extra money coming in for whatever reason, then you need to make sure that when you go to buy stocks, that you look for stocks that are dividend stocks, stocks that pay dividends. Total annual dividend per share, so like they said, $2 times the number of shares. If you had 30 shares, you just multiply those. Again, we're not going to do any math with this. Your assignment is just going to be the quiz that's on Moodle to do after this, and then you're done. Your annual yield, yield per year, is your annual dividend share. So if you pay, or if they pay you $2 per share, and then you divide that by the cost of the share. So when you bought the share, maybe it cost you $20. You just divide $2 by $20, and that's going to give you some decimal that's going to be your annual yield. Sort of like the APY that we talked about on the previous assignment. Alright, so that's the end of this. Again, all you have to do is take the quiz. Congratulations to all your seniors, and this is the last assignment that you have to do. If you have friends who are seniors and they haven't been doing this work, help them out, get them to get the stuff into me. I hate to be the cause of somebody not getting out of here. And congratulations and good luck. Stop back and see us when you get when you make your millions, and you can share some of it with me.